Welcome to another edition of TraderCast Daily Market Report. We are starting a shorter trading week, at least in Europe, with a bank holiday on Monday. And also from the economic calendar point of view, we should be aware that Friday, 8th of May, will bring to attention unemployment rate and non-farm payroll numbers in US, which should be a very important market moving event and potentially increase some volatility regarding dollar and also some indices as well. Let's start with euro dollar. From a very basic point of view, this does appear to be a double bottom with a clearly defined neckline at 110.53, at least in this 4-hourly time frame. A longer term trend, monthly, weekly and daily, it's still pointing to a fairly embedded downtrend with the logical resistances at 112.94. A breakout above that level could potentially open up the way for the retest of resistance at 113.80, followed by 114.52. These two levels would also be seen as logical shorting levels for anybody with a longer term point of view, so end of day point of view. Also, these two levels would be seen as a good partial profit taking zones for anybody who is looking to trade this breakout. The other alternative is if this current resistance at 112.94 holds and the price moves lower, then downside support will be located at 111.31. A swift move lower would test this neckline support level at 110.53. We might see a little bit of a consolidation, maybe bounce back from that level, or a loss of that level could potentially target 110. Let's talk about FTSE. This level down here at 69.20 is a significantly important support level from a 4-hourly point of view, but also end of day point of view as well. This would be a 50 period EMA. Also fib retracement from the swing low to the swing high of 50%, and we also have a rising support trend line from end of day point of view pointing to the same level. So this consolidation here and a breakout, it's actually a logical reaction. So where to from now? Logical resistance is it was resistance, now it's support at 7,000. Apologies. Psychologically important round number. So the fact that price actually broke through that level, we could see a bit of a consolidation and maybe come back to that 7,000 level from above to retest it as a newly found support. If that happens and the price moves swiftly higher, then we could see 7,051 as a upside resistance zone, followed by 7,083 and 7,100. Only a breakout above 7,100 could potentially open up the way for the retest of all-time high at 7,127 and higher. The other alternative is if we have a sequence of these higher, lower highs, and the price spikes into this 7,083 and then kind of consolidates here for a while, and then we get rejection at that level and the price moving swiftly lower, then yet again the 7,000 comes in play. A loss of that 7,000 level could potentially open up the way for the retest of 6,950, which was referenced in the past, followed by 6,922, followed by 6,873. Wall Street or Dow Jones, yet again, it appears to be a little bit more bullish than FTSE. We have something that appears to be expanding megaphone or expanding triangle price action, but we also have this a falling resistance trend line which was taken with conviction, and the price moved higher. Apologies, let me just switch this pricing off. So the current high where we closed on Friday at 18,031 is a decent point of reference. If the price moves higher, then we have 18,100 as a logical upside point of control zone, which would be a sequence of these lower highs. Only a confirmed breakout and a green candle closing above this 18,100 in an hourly time frame could potentially target further upside resistance towards 18,155, followed by 18,211, even 18,328. The other alternative is rally into this 18,100 zone and then swift move lower from that level, therefore selling, and the loss of this 18,031 could potentially target further downside support towards 17,950, followed by 17,914, which would be another point of control. Only a confirmed loss and a red candle closing below that level in an hourly or 4-hourly time frame could potentially target further downside support towards 17,734. As I said, US markets are open on Monday, European markets are closed on Monday, so let's see how this plays out. The last thing that I want to talk to you about is gold. We had a fairly substantial breakout in gold, and then consolidation, and then this massive rejection last week. That pullback challenged some fairly significant support levels. The most important one was here at 1,200, 1,200, followed by 1,195. Once we lost that, then that becomes a newly found resistance instead of being the initial support based on this trend line and being a round number. So where to from now? This low here, it's previous support. Now this is becoming our resistance. So 1179 half, 11,000, 1180, 1,180 was the number, or a level that was tested over and over and over again in the past. So that's our immediate resistance. If the price moves swiftly higher above that level, we could potentially challenge further upside resistance towards 1185, 1185. Only a breakout above that level and a green candle closing in 4-hourly time frame above 1185 could potentially target further upside resistance towards 1195, followed by 1200. The other alternative is either a spike into one of these zones and then a quick sell-off, or a sell-off from the current levels or current high could potentially target further downside support towards 1170, followed by 1160 and 1153. Apologies, I was speaking really fast. I was trying to cover as much as I can in a short period of time. I hope you enjoyed it, and I'll speak to you all during the live trading broadcasts on Monday. Stay safe.